markets are trading. Simon Michell joining us live from FIIG Securities. Simon, good afternoon to you. Now, of course, we saw overnight the Fed funds rate remaining unchanged as widely expected. I mean, how do we see those US yields tracking?
Good afternoon, Leanne. Yes, and pretty flat in US yields at the moment too. We just saw a bit of a pickup in the 30-year, which has reached 3.08%. Really steady as she goes. I think, as you said, the Fed did what the market expected, and given the current political climate, there wasn't a lot of commentary around what the Fed anticipates their moves may be through this year. If you have a look at the market still looks to June as the possible next move upwards by the Fed.
Overall, I mean, there seemed to be a slight improvement in their view towards the data flow that we've been seeing coming through. Of course, looking for any signs around that fiscal stimulus and so forth. What were some of the other key takeaways for you?
Yeah, look, it's interesting. I think that, obviously, inflation is getting to where they'd like to see it, around that 2% level. I think, growth is starting to look good, but I think there's still a bit of political uncertainty, and I think they just want to be cautious that they don't get too carried away, as we've seen some other markets, and so they've sort of just held back a little bit. But one of the interesting things that we were certainly looking at is the US currently holds, US Fed currently holds $4.5 trillion dollars of its own securities that it bought as part of the quantitative easing. Now, as those bonds mature, the US Fed reinvests them, so they continue to hold that volume, and there was some speculation that they might start allowing those bonds to mature and not reinvesting them. They decided not to move in that direction. They'll continue to hold that $4.5 trillion.
Interesting. All right, let's check in on Aussie yields. We've just seen this record trade surplus that's come through, the Aussie dollar's moving higher. How are we seeing those yields moving?
Yeah, definitely seen yields move in the same direction, actually, as investors no doubt move into some more growth assets. Here we're seeing a pick up a few basis points. I think the 10-year currently around 2.78, so that's up about sort of 4 basis points. They were pretty steady until we got that announcement. So, yes, very much on the back of that trade surplus announcement.
Fantastic. Simon, thanks so much for joining us as always. Appreciate your time.
Thanks, Leanne.
Simon Michell there from FIIG Securities.